Folks, today I'm very excited to welcome Denise Boroff. Denise Boroff is a business advisor for small and mid-sized businesses. Denise, how are you?
I'm doing great. How are you?
I'm doing fantastic. How are things?
Things are starting to pick up. Many of the business owners that I work with during COVID, they had to shut down and now they're re-ramping up their business and looking for ways to hire employees and to get equipment and to expand. So it's getting busy now.
Oh, I'm so glad to hear. Actually, this is also the perfect transition to one of the questions I had. When we first met, I remember you were educating me and my team about the other ways, other services, how a business can uncover money within their businesses.
Yes.
And one of the products that I was amazed to learn about was cost segregation. Can you please tell me a little bit more about it?
Sure. I get that question a lot because it is not something that cost segregation. It's a big word, but what it is, it is a study of that's used for federal and state tax income purposes. And what it does is it separates the improvements that are done on a commercial building, either if you purchased it or you leased it, and it allows you to recover cash for those said improvements. Now, it's not a loan, but it is an actual refund.
That was the part I was amazed about. I'm like, is this kind of a loan? You have to repay it, a government program? But yes, you did mention that it's basically, and again, this is me recapping here, if I understood you correctly, the business already paid taxes and they can claim and go back and amend their taxes to claim that money they paid to the IRS. Is that basically how it works?
That's the basics of it. Have already paid these taxes. And because you were not aware of or didn't take advantage of the cost segregation process, which can be where you can defer some of your taxes, you can now go back and re-amend those returns and get cash back from the IRS to put into your business.
Yeah, fantastic, because this is it opened doors to other ways to add cash infusion, liquidity, which we very much know a business needs.
Yes, that is the problem right now with many businesses, is that liquidity. When they think about needing liquidity, the first thing you think about is, how am I going to pay this back if I'm going to take out a loan or a line of credit? Is my business going to pick up? Are we going to have another situation where we're shut down? All of that. And so they tend to hold off on a lot of that, loans and things like that, because they're not sure. But knowing that you have something that you can pull out of your business that you were even aware of, get funds and use them and not have to pay it back is a big help.
Oh, huge. It's money dormant into your business that you're uncovering. And here you are. I mean, I just feel it's fantastic. And again, it's about knowing the information and education. That's how 2 years ago I was able to know about the cost segregation, this cost segregation, basically.
Absolutely.
Denise, I was wondering about the actual process of cost segregation. Could you please explain, whenever you meet with a potential client, how does that process work?
First, we meet with the client and answer 7 simple questions that will reveal an estimated refund amount. Then we would determine if that value is worth the time it takes to move forward. If we determine that it is, the next step is a meeting with my engineering team. And of course, I usually ask the owner to bring along his financial team, CFO, his accountant, CPA, whoever it is that he trusts that handles his taxes. We will go over the questions to make sure we have the correct answers and that my team fully understands what they're looking for, and then ask additional questions to find additional refunds. Once the owner says, let's move forward, they are out of the picture to go and play golf or run their business, whatever they choose to do. And their financial team will begin to collect the documentation that we need. At that time, we will create the reports, come back and review, and then submit the documentation to their CFO or their CPA or the owner for them to go ahead and file and start getting their refund.
That sounds pretty straightforward. But my question here is, what are the requirements? Does any business owner in town can come and qualify for cost seg? What will be the basic requirements to be a viable candidate?
The basic requirement would be someone who has purchased commercial or 5-unit, which is also considered commercial building. Could be a company that has done new construction. Could be a company that does these single family resident projects, as well as someone who leases commercial property. The cost of the building should be around $750,000 or more. And for leased property, for the improvements, $250,000 and up in improvement cost.
I see. That's quite precise. That's exactly what I was looking for. Meaning, so anybody who does any sorts of work under 250K could not qualify. It has to be a minimum of 250,000. Correct?
Correct. Because anything under 500,000, in my previous experience, tends not to yield much of a refund coming back. The average refund is about $75,000 per $1 million in purchase price of the property.
Fantastic, because we know how some businesses during COVID did extremely well and some didn't do as well. So any monies that you can uncover in your business and you already pay taxes to it, and we're talking about a refund. So it's not something, as you mentioned, it's not a loan. This is, I don't want to say free money, but it's money that you're uncovering. Yes. and it's back into your business. I mean, that's always something to take.
When you think about COVID, because it's such a pandemic that we haven't had anything like this in years, and the way that the economy was shut down and affected, many of the business owners did a lot of improvements because they had to stay afloat. So if they changed the lighting, they put up partitions, they had to build outside seating areas, all of those things, even if they just lease the property, will yield towards a benefit for them.
Yeah, that's great. I'm very glad that we're talking about this, because I'm pretty sure a lot of business owners out there could be great candidates, but yet they don't know about this information.
Absolutely. In the last few years, because of different congressional changes, tax incentives have become very, very pertinent to everyone. They're all looking at it now. They're thinking about different ways to bring in those funds. But before, it was something that people thought I had to be a large business to do. Your larger businesses, they do cost segregation on a regular basis. But your smaller business, they weren't privy to the information, or they thought they weren't large enough to benefit.
You know, I got to tell you, when I first heard about it, I thought there were some kinds of, fees from the government. Again, my first thought it was maybe a loan, another type of loan. And then here you are telling me it's basically money sitting into your business that you just have to uncover and follow file the paperwork for it. Basically.
Absolutely. Absolutely. That's true.
How long does this take? Like from start to finish? Hey, what will be the length? What will be the approximate time here?
It does depend on how fast the business owner gets the documentation or his CPA team, financial team gets the documentation to us. That can make and vary, but on average, everything flowing smoothly, 60 to 90 days. They'll start seeing refunds coming back to them from the IRS. At this present time, we know the IRS is behind, so it's not a normal period, so it could take longer. But figure 60 to 90 days, you would start seeing some of the refund checks coming back to you.
So my take is the sooner the better. The sooner the file and they send you the documents to start the process, the faster they're going to get their refund.
Correct. Correct.
Another question.
Yes.
What would you say, because I feel that we covered the basics, what would you say to potential reluctant candidates? Because it seems, and again, thanks to you, I know the product, my team knows the product, and we're very much educated about it. But for some people, it seems too good to be true.
I get that question a lot, and I get that response from business owners when I sit down with them and show them the refund. I have actually had one business owner say to me, "I don't look good in an orange jumpsuit." And I explained to him, "Neither do I." So I understand the hesitancy when it's something that you're not aware of. And that's why we always bring in their financial team. Many CPAs and accountants understand the process, but because it is specialized, they don't engage in it because it is time consuming. Our company, that's what we do. As it's an engineering, architectural, construction type based concept, tax accounting concept, and that allows us to focus just on that end of it. Whereas your CPA, he's busy making sure that you're paying your bills, that your business is running okay, that your cash flow is straight. Whereas this cost segregation is just looking at the building improvements, separating them out, and applying funds to each aspect of the improvements, going back, amending your taxes, and going ahead and getting your refund.
Yes, I've heard from CFOs and CPAs. I actually knew about the process, but again, being a specialist in that field, obviously that's what you guys do, and then it helps tremendously. Like you mentioned, the process is quite lengthy, and we know CPAs, have other clients to take care of and other portfolios, and it's not always easy to, do all these specialized project because they have to take care of other clients.
Yes, they have to take other clients, and the IRS does require that it is an engineering study done by professionals who have, experience in the engineering and the construction and the architectural side of this. Also, another thing that I mentioned to business owners are the benefits. If they're looking for increased cash flow, cash in hand, they want to free up funds for investment. Maybe they want the ability to go back and remend their returns, but they're not sure how to do that. Or basically get a reduction in their taxable income. That is another reason to move forward. As we go forward right now and you look on the horizon, a lot of the different projects that have been set in place by Congress now are looking to increase taxes, because in the previous years we had a big drop in how much we paid in taxes. And now we're starting to see the increase in goods and services, as well as attaining those goods and services. So if there's any way where you can reduce your taxable income and at the same time move it forward to the years going into the future, it's really an advantage to take steps and move towards cost segregation and see how your business stands up when it comes to refunds that you may have sitting within your business.
Let's just put the word out there. We need everybody to know about it. And it is truly something that has tons of benefits as far as, getting the cash that you already pay taxes on. I mean, there's no doubt about it. We want to definitely have people, educated about cost segregation. And
I would say if you or yourself or someone who has purchased a building, leased a building, they've done different types of improvements to it to make it fit their style of business. It can be machinery for manufacturing, it can be flooring, putting up partitions, any type of improvement that they have done with plumbing or lighting. Many people are going solar.
yes,
It would be a good idea to look into cost segregation, especially if you've done this within the last 5 to 10 or 15 years. And if you just recently closed escrow, this is the best time because you have more time to pull in depreciated funds and increase your refund coming back from the IRS.
so that's a great point there. So how far back do you guys go?
You can go back up to 20 years, but we say it's more beneficial to stay within a 5-month to 15-year max, because the further back you go, the less there is to pull in for the depreciation of the actual building itself. So a good rule of thumb is 5 months to 10 years of the purchase time you purchase that building would be applicable for you to see a considerable or decent refund.
I see. So we already covered that in order to, one of the qualifications will be at least 250,000 in improvement. Now, are they businesses that would not qualify for this type of program?
If the business hasn't purchased any property, 750,000 or more, or their improvements are under 250,000, when it comes to cost segregation, there more than likely would be little to no refund amount available or benefit.
What about industries? Cannabis, all kinds of industry, do they also qualify for it?
As long as they're commercial, because it's based upon the actual building, not necessarily the type of business. So if I have a cannabis building and I had to change the leased space that I'm in to either accommodate, say, I'm thinking about when you talk about cannabis, one of the things that they do is they have to have some type of machinery in order to manufacture or to test the product. If they are farming the product in-house, they may have to have special lighting for that. Those types of things are improvements that they have to make to the building, and it again yields a benefit. Any other business like manufacturing, even your restaurants, they have to do extensive changes in order to meet certain requirements, especially for COVID and probably even after. Your doctor's offices, they have to get special equipment depending on the type of business or the practice that they are doing. So I would say pretty much any business that leases or owns space that fits within the parameter of the $250,000 or more in improvements because they leased it, or they purchased $750,000 or more and they did $250,000 in improvements on that purchase, they can see a definite benefit to cost seg.
Thank you so much, Denise, for stopping by today. Here we are, folks, another great episode of Square Deals web series. See you next time. And until then, please be safe.